following presentation is brought to you as a courtesy of Forex Academy. This is part of our service, Courses on Demand. If you find this interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all of our services for free. Your like is also highly appreciated. Enjoy!
Let's have a look now at buy the rumor, sell the fact, and how market participants can gear up for these trading opportunities. Buying the rumor or selling the fact is a piece of trading advice developed in early stock market trading. It relates to a situation where the price of a stock would move higher due to traders buying because of rumor they simply heard about possible company acquisitions or higher than expected earnings reports. So there is many different examples there that could start the rumor mill, where traders would actually decide to trade off these rumors and actually position themselves in the market. With the impression the rumor will eventually come true, actual buy-side volume is created. So that's what happens now. It should be worth noting, depending on the rumor, sell-side volume can be created as well. It's not always on the buy side. Particularly, it has more of a common approach to buy-side volume when we discuss buying the rumor, selling the fact, and equity trading. Inevitably, when the news or economic event occurs and the rumor turns out to be untrue, the sell the fact sentiment takes hold of the market. The company earnings perhaps come out negative, which causes a quick sell side shock to the market in question. So that's a classic example of hearsay, where traders interact with the market based on a rumor of a possible acquisition or perhaps very good earning reports. When the fallacy turns out to be untrue, then the market of course reacts differently, and then the trade is sell the fact. And we have a picture here with our financial traders, particularly I think equity traders, and I would like to just read the quote at the bottom, indicative of how market participants can gear themselves and trade off hearsay and rumors. The good news, sir, is that Harris was able to sell off our losing stock. The bad news is that Simpson here bought them from Harris. So that is certainly indicative of how market traders can involve themselves willy-nilly, trading off rumors and actually looking to profit and speculate from such rumors. But then obviously the sell side factor may come in when the story unwinds. It should be worth noting, in the Forex markets, buying the rumor, selling the fact is interpreted differently, mainly because rumors are not as common, and the vast number of variables affecting Forex markets would make it very difficult for a rumor to cause any real momentum or movement in price. Now, unless the rumor is an absolutely huge, groundbreaking rumor that will totally rearrange the Forex markets, it is very unlikely that it will cause sustained or a very large shock to price in a Forex markets, given the liquidity and given the depth of the Forex markets indeed. The Forex equivalent to buy the rumor, sell the fact is to trade in anticipation of current news releases. Traders often see news releases as a way of making a lot of money very quickly. Now, it's not always the case, but many traders do take very small positions in preemptive positions before news releases are about to occur. An economic announcement like the monthly non-farm payrolls figure can cause dramatic changes in asset prices, and many traders conduct fundamental analysis and trade in anticipation of speculative prices. By the time the news has been released, many traders have traded based on the forecasted number and are now ready to sell the fact. So let's just rewind. Let's just think about this for a moment. We have perhaps a non-farm payrolls. We believe it's going to be very strong given the forecast, and before the figure comes out, we actually make a trade. As a trader, as a fundamental analyst and our decision making, we've actually made a preemptive decision to enter the market before the figure. We're not guessing. We're using our fundamental discussion of the markets in question and positioning for the move itself. Now, the figure may come out very positive indeed. We're on the right side of the market, and that's fantastic. The market trades up and we're in a profitable position. What is our decision now? Well, obviously, if we decided to, many traders could have very well made the same speculative position. We could sell or trade for a nice profit. And then what we could do is actually sell the fact. We could look for a pullback in that price, given that many traders may have expected, or the market has already priced in this move to the upside, and we now are looking to sell the fact. And more often than not, we actually do see very strong pullbacks in trades like this.